So the only thing I did that's Bitcoin related today is I decided to go with a $3 strike now on my out of the money puts on Mara that I'm selling. Um, and I go out to the end of the year or beginning of next year rather. So I sold a put today on Mara at a $3 strike, expiration of January 15th, 2027. It got paid 56 bucks on that, and that's where I'm going to be entering for Mara puts. I'm going to add Clean Spark to that probably too. In addition, today I've been watching Ives, which is an exchange traded fund, and I know a lot of people don't like Dan Ives too much, but to be honest, the ETF itself has some pretty stellar holdings on it, and it's been drawn down relative to the AI scare, the AI bubble scare, which I don't think it's really a bubble. It's actual capex pouring into it, and someone's going to win on that capex eventually. And AMZP is a single stock ETF by Curve, and basically it trades options on the its underlying, which is Amazon. And I already own quite a few shares of it, so I decided to put a limit order on that today and try to get in close to the low of the day. And I got filled. Horrible bid and ask on that, so I got filled at 26.34, even though I had a limit order. It dropped further for the day, so I picked up another 20 shares of that one. And after Amazon earnings, I'll take another peek at it, see where it's at, and consider loading up more shares of that. But if we look at the Eyes Fund real quick, and I'll show you why I like it so much. It's just the asset allocation. Look at the top 10. Micron's up until it's been pulling back recently has been the winner in the chip race pretty much. And TSM, Taiwan Semiconductor, you just got to have as the one that makes all these chips. And then you got Google, Alphabet, Class A there, and NVIDIA, Meta, Amazon, Apple, AMD, Tesla, Alibaba, which I don't really care for that one too much. It's Chinese, but they're the leader in their division in China pretty much. So I like this fund. I don't like Dan Ives particularly much, but I like what his holdings. I ain't got no problem with his holdings. I care less about my personal feelings towards him. And if you look at the 3 month on it, it's at a discount, in my opinion. Since inception, it's still up nearly 20%. So I decided not to buy shares just yet. I decided to do options on it. And so I did that option today. Let's take another look at that option I did. I did that option today at a 29 strike going out to March 20th expiration, and I got filled for 120 bucks. The bid and ask is terrible on that. The bid was 75, ask is 175. I get filled for 1.20. Multiply that by 100, guys. That's 120 bucks. So I'm fine with that because if I get assigned, I'm going to be assigned at a 27. Is that right? Yeah, 27.80. And if we look at this fund, right, the 52-week low is just underneath 25 bucks. So it's going to be my growth pick. I kind of want to own all these stocks anyway. They're within it as a top 10. I think that's a great pick. So I have no problem loading up on this fund during a significant correction or pullback in the market. And what better way to do it than to get paid by selling puts on it? So it's got a very little liquidity to it, but it's got some. So that's how I got a fill on it. And probably what I'll do is I'll step a little further out of the money as the market pulls back and sell puts a little bit further out of the money, not too far out of the money because I don't mind owning these shares. At some point, if this fund goes down like 20%, or an additional 10 to 15% from where it's already dropped, I'm just probably, well, anything that's close to that 52-week low, I'm going to pick up shares. So look at the 52-week low again. If we get down to that level, I'm picking up shares or selling additional puts, and I'll be loading. I'll probably invest 10,000 into this fund. More than likely, it's hold for the long term. It's almost got $1 billion in assets under manager already. It came out June 3rd of 2025. So just in the last 9 months or whatever, 8, 9 months that it's been around, it's almost got 1 billion in assets under management. Now the expense ratio is kind of high at 0.75. The dividend yield, probably based on some of their underlying, basically kind of defrays from that expense ratio. So the reality is your expense ratio is only zero point 0.3 on that. I can live with that because the optionality on this is getting better. It's not great yet, the options, but there is some optionality on this if you look at it. This put at 29 strike. The last entry was 47, but I got them 120. I don't know how that's showing, but I did it on Schwab and I got 120 for that contract. So use limit orders. So you see the open interest, it's only at 10. The 28 strike has 48 in open interest, 5 in volume today. Is going for between 30 and 55. And the last entry, someone received $50 on that. But I think I did the 29 strike. Yeah, I did the 29 strike. Used the limit order. I got filled for 120. I'm gonna be upping the ante on that as the pullback deepens. If it does deepen, I'm gonna be upping the ante on this position. Obviously, I'm pretty well allocated. I got enough cash to do probably 10 contracts on this minimum. And I'm picking growth because on the rebound, these type of funds that rebound really good. I mean, as far as IVES, maybe not AMZP or Mara, but Mara this deep out of the money, going out to the January 2027 and getting $56 on a contract, to me is kind of a no-brainer. But I am going to add Clean Spark to that mix. Anyway, this is my trades for the day. This is what I've done. Take a look at my portfolio real quick. My dividend portfolio, see how it's doing. And with what I'm holding in this thing right now, right? I'm still up, overall. So we have to go down quite a bit on some of my positions. I'm bleeding bloody on BTCI. The way I'm going to approach BTCI, to be perfectly honest, I'm waiting for that 200-week moving average of Bitcoin to hit first, and then going to sell the out of the money or at the money, because the only strikes available on BTCI are 35 going out to the end of the year. Unless they come up with new strikes, that's basically in the money currently, with the share price being around 30 something, low 30s. But I'm going to sell a put on it at some point. I'm going to sell a put on that and going out toward the end of the year and try to lower my cost base. If I'm never assigned, that's fine. I get to keep all that premium. And I'm going to keep everything I got in here and continue to average down. I'm bleeding on a lot of them that I got in slightly early on. Lately, I've been adding stuff. But then on some of the positions I added over time, I'm doing okay that I added back in April. I'm still doing good with dividend income received. And my QQQI position is doing really well, and SPY.io. So PBR, I'm up big on that, but I got a call option on it. So I'm probably going to lose my shares. Anyway, so if we get a deeper pullback, I'm talking about a double-digit correction where I'm significantly underwater on any of these. I'm going to start adding, not so much aggressively on blocks anymore. I'm waiting for that 58,000 on Bitcoin before I consider adding more shares at that. Or probably what I'll do, like I said, is I'll sell a cash secure put on BTCEI when it drops a little bit further and I'm getting more on the option premium. Anyway, that's what I'm doing, guys. I got money aside, as you can see in JAAA, for buying the dip. That's my safe harbor fund, pretty much. All right, guys, take care.